Hello and welcome to myfinanceteacher.org. In this video we're going to have a look at Bitcoin and Ethereum. Since the end of August, Bitcoin has been in this uptrend channel on the 4-hour chart. The chart looks pretty strong and we don't see any obvious signs of weakness. Over the last few days, the 14-period RSI on the 4-hour chart has bounced from just touching that oversold level, and although it's now approaching the overbought level, it hasn't entered that overbought area yet. So there is still some potential for stronger prices in Bitcoin. Looking at the uptrend itself, remember that the trend is your friend until it's broken, and the trend so far looks good as well. Even if over the next 1 or 2 days Bitcoin does come down into, let's say, 11,600 or that level, it would still be within this rising channel. Another good thing about this chart is that Bitcoin has just broken beyond a couple of recent highs. So while in the second half of August, chart gave us lower highs and lower lows, less than 8 hours ago this pattern has been broken and we've seen a higher high compared to previous couple of highs. Some potential resistance for Bitcoin might be at the 12,000 area. That's firstly because it's a round psychological number, and secondly these candles in the middle of August top somewhere around that $12,000. In the last couple of hours, Bitcoin actually came very close to that $12,000. Maybe over the next few hours, it's going to take a breather before breaking above that resistance zone, in which case the next level of resistance would be at this August 17th high, somewhere at about 12,400, 12,500. So cooling off over the next few hours just a little bit will allow the Bollinger Bands to catch up with the price, which in turn will let the price to push through that resistance zone before it pokes too far above the upper Bollinger Band. So that is how the 4-hour chart looks like. Usually though we like to look at daily charts and our 2-month cycles in Bitcoin. Given that over the last few days Bitcoin is relatively strong, I would say there is a pretty good chance that the 2-month cycle in Bitcoin finished on the 25th of August with a very modest decline. The drop from the top of the cycle has only been around 10%. If that is the case, that would give us a cycle that is 59 days long, and that would be quite normal. The average duration for a Bitcoin cycle over the last several years is actually 64 days. So a 59-day long cycle would be pretty normal. On the other hand, if we are still to see a significant drop in Bitcoin breaking below this recent low at 11,200, maybe over the next few days, giving us a cycle that is, say, 69, 70 days long, that is also pretty close to the normal duration, which means it's a possibility as well. I would actually like to see that, as that would give us a more recognizable cycle low with a more significant percentage drop from the cycle top and maybe a lower level on RSI. Over the last few days, RSI has only dropped down to 48.4, which might be low enough for the end of the 2-month cycle, but on the other hand, there is still a lot of potential for RSI to be a little bit lower to give us a more recognizable low and a nicer entry point with a lower level of risk. Talking about entry points, the members at myfinanceteacher.org have actually seen this post a couple of days ago where I was entering into a very modest position in Bitcoin. Since then, that position has increased by only about 2.5 to 3%, and all of the details of all my trades are actually tracked over here within this product called Fictitious Portfolio. So for more regular detailed updates on a range of assets, consider joining us at myfinanceteacher.org. You can join by clicking this register button on the homepage. Coming back to our analysis of Bitcoin, one indicator that can help you to identify cycle lows is the level of return based on the duration of the cycles. So the blue line here is Bitcoin price, while the red line is the ongoing 60-day return. To be honest, it's a little bit difficult to read this red line because of very high volatility. We see that it ranges anywhere from minus 40% to plus 120%, and sometimes Bitcoin cycles move this red line by 60 to 80%, while in other times a Bitcoin cycle would only move this red line by less than 40%. So instead of looking at 60-day returns in this particular asset, it's more useful to look at a 30-day return. There is a little bit less volatility and more consistency within the levels of return. So what I've done on this chart is I've used these dark circles to locate the level of the 30-day return during the cycle lows on the Bitcoin chart. So as you see, since early 2019 to July this year, we've seen 8 Bitcoin cycle lows. And out of these 8 Bitcoin cycle lows, 5 of those took place when the 30-day return was anywhere between minus 30% to just under 0%. One of cycle lows gave us such a significant drop in Bitcoin price that the cycle low took place when the 30-day return dropped all the way down to negative 50%. While two other cycle lows, one in the middle of last year and one in early May this year, gave us cycle lows that corresponded to the 30-day return being above 0%. One of them is slightly above 0 and the other one is slightly above 20% returns. So what this tells me is generally it's a nice idea to start accumulating some Bitcoin when this chart of the dark red line comes within this band somewhere between negative 20% and just below 0%. And what do we see right now? Well, this chart has just dipped below 0% on the 31st of August. The chart doesn't include the data for the 1st of September as the day hasn't finished yet. So what it tells me is whether Bitcoin cycle did finish on the 25th of August or whether we are going to see a slightly lower low over the next few days. In either case, I want to start accumulating some Bitcoin for the rally of the next 2-month cycle. So whether the cycle has already finished at 59 days or we are still going to see slightly lower prices with the cycle lasting maybe around 70 days or so over the next few weeks, I do expect some sort of a rally in Bitcoin price into the beginning of the next 2-month cycle.
Next, let's have a look at the Optimism index in Bitcoin, or Optics. So what I do in this chart is I try to identify the levels of Optimism index in Bitcoin at the time of the cycle lows. And what you see here is that in most of the cases, cycle lows actually take place when the Optimism index is pretty low. It's close enough to this green line. In other words, the sentiments are pretty negative, nobody wants this asset, and that's when you want to buy. So what is happening at the moment? At the moment, Optimism index is pretty high at 49.8, but a few days ago it did reach very close to that green line. So again, this tells me that there is a pretty good chance that this 2-month cycle in Bitcoin did finish a few days ago at the end of August. On the other hand, as you see, this Optimism index is not a perfect timing tool for buying opportunity. Look at this February this year, for example. We see Optimism drop down to this green line in February with this sort of 20% decline in Bitcoin. After that, Optimism index jumped all the way up to 60, followed by another trip very deep below that green line, just around the time when Bitcoin dropped more significantly down into that March low. Although this is not a perfect tool for timing your entries, you probably don't want to buy when Optimism is too high near the red line, and you want to consider accumulating when it's close to the green line. That's what I'm doing right now. I'm not jumping into my full positions, but there is a pretty good chance Bitcoin cycle has finished, and I want to start preparing for the rally of the next cycle. Next, looking at Bitcoin premiums. This is also some sort of a sentiment measurement on the market. When everyone is bullish, the investors that don't really know how to invest into Bitcoin directly are happy enough to pay some premium through this fund that invests into Bitcoin. And when the markets are pessimistic, the premiums that investors are happy enough to pay are much lower. So at the moment, the premiums are close to 21%, whereas usually, at least over the last year, it's been a good idea to buy, and the Bitcoin cycles actually took place when these premiums were around 10% or even lower. So this tells me that there is still some chance for a decline in Bitcoin over the next maybe 1 or 2 weeks. And that is why I'm not jumping with a very large allocation at the moment. Next, let's move on to Ethereum. Starting with the 4-hour chart, it looks very strong. Ethereum also had this pattern of lower highs and lower lows in the second half of August, and this pattern is broken, it's shattered. We see higher highs on Ethereum. However, the 14-period RSI on the 4-hour chart is quite deep into overbought area, and Ethereum has already poked a few times through the upper range of the Bollinger Bands. Plus, those Bollinger Bands are quite wide. So over the next few hours, I would expect some cool off in Ethereum, not too much, followed by a continued rally over the next few days to a few weeks. Moving on to the daily chart of Ethereum, there is a high degree of certainty that Ethereum cycle finished on the 25th of August, and the declining phase of that cycle brought Ethereum down by about 16 to 17%. It's not significant for Ethereum, so it is a very modest decline, but in my opinion, the previous cycle in Ethereum did finish a few days ago. The average duration on Ethereum cycles, at least since the beginning of 2019, is around 52 days. And given that the new cycle is only 7 days old at the moment, there is possibly at least another couple of weeks for an upward momentum in Ethereum. On the daily chart, we see that RSI is just starting to enter into overbought area, and there is still a lot of space to go much further into that overbought area. And although Ethereum is poking through the upper range of the Bollinger Bands, this is only the first poke on the daily chart, and the Bollinger Bands are not very wide. One should be concerned when the price is poking several times through the upper range of the Bollinger Bands, plus when the bands are quite wide. So the daily chart looks quite good. Next, let's have a look at that 30-day return for Ethereum. Again, I originally looked at a 60-day return, which is, say, supposedly close enough to that 52-day average duration of Ethereum cycle, and the return line was very volatile and difficult to read. Let's look at 30-day return, supposedly half the length of the cycle. What we do here is use these dark circles to identify the levels of that 30-day return at the time of Ethereum cycle lows. Since early 2019 until July this year, we've seen 10 of these Ethereum cycle lows. Actually, there's another one over here in January 2019. That gives you 11 cycle lows. Out of these 11 cycle lows, 6 of them took place within this band between negative 30% returns and somewhere around negative 5% returns. Actually, counting this January low, that would give you 7 out of 11 cycles, finishing with the 30-day return within this band between negative 30 and negative 5% returns. One of the 11 cycles dropped deep enough for this 30-day return to come close to negative 60%, and only 1, 2, 3 cycles finished with the 30-day return somewhere around 20 to 30% positive returns. So we see from this chart that I generally want to accumulate Ethereum when the returns are somewhere below zero, close to that negative 30 to negative 5% returns. Although again, this tool is not a perfect timing tool. Look at this May this year low, for example. Although prices did bottom somewhere in the middle of May, the 30-day return continued to drop into the second half of May. Same thing happened over here in summer last year. Although Ethereum did bottom in late May, early June, the 30-day return continued to drop for another few days. Something similar might be happening at the moment. There's a pretty good chance Ethereum cycle finished a few days ago, and this 30-day return continues to drop. It's actually somewhere around 12% or so. So over the next few days, we might see 30-day return come down close to 0%, while Ethereum might actually continue its rally. The reason for that is that because a few weeks ago, Ethereum price did very well. So over the next few days, even if Ethereum price stays where it is, the 30-day return is going to drop a little bit. Anyhow, although this red line might continue to drop, it will probably soon get close enough to the top range of this optimal band, just below 0%. Next, let's have a look at Ethereum Premiums, and it's actually really volatile, difficult to read, ranges anywhere from plus 20% to above 800%. So what one could say here is that the Ethereum cycle lows usually take place when this premium is somewhere below 100%, or at least when this premium has dropped significantly. As we've seen at March low, while Ethereum price dropped from $290 down to $100, the premiums dropped from around 500% down to around 280%. So although this indicator is a little bit hard to read, current level of 39% is pretty attractive. So again, for these reasons, a few days ago, I informed the members at myfinancesteacher.org that I entered into some modest positions in Ethereum, and actually since then Ethereum has already given us around a 13% gain, although the position is quite modest. So for more frequent and detailed updates on a range of assets, join us at myfinancesteacher.org. In addition to my posts, I have a colleague writing these weekly newsletters where he shares his extensive investment experience that he's accumulated over multiple decades. So with the Ethereum cycles pretty much done, I just have one question to you guys. Do you think the Bitcoin cycle is still going to give us a lower low over the next several days, or are we off into the rally of the next cycle? Let me know what you think in the comments below. Remember to hit that like button, subscribe to the channel if you haven't, and good luck in your trades.